Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Monday, April 29th. Last week in the markets, we had pretty much green across the board, ever so slightly. Markets up from 1.1% to Russell being up by 2.5%, Nasdaq up to 2.25%. And on Friday, we had a pretty much of another benign day. Markets really just digesting this move and really looking for some sort of a breakout in either direction. Either we continue to move higher or we start to break down, which what we're seeing are indicators and chart patterns are showing us some bearish signals. So we'll get into that in a moment, but just a quick rundown of the numbers. Nasdaq down 8, gold down 16 on Friday, Dow up 11, S&P down 2. So pretty much of a mixed bag. Just to quickly go over the economic data today, we have a couple. Personal income and spending due out at 8:30. We also have pending home sales, which is a market mover for March, due out at 10 o'clock. And then 10:30, we have Dallas Fed Manufacturing Survey. And then, of course, 9 o'clock, we have Case-Shiller Index. So a lot of housing stuff, so you might want to be looking at the home builders. They might be setting up for some sort of a move sometime today. Now, as you can see here on the board, we do have copper that was up a little bit. We had some natural gas that was up, gasoline, and oil had a big move last week on that OPEC comments. And then, of course, we had some of the grains and agriculture, a little bit of a mixed bag here, but pretty much green across the board. But we're really not going anywhere. We haven't gone anywhere in the last couple of weeks, 2 to 3 weeks, other than that big drop that we had. So we were really kind of quiet. I'm going to go into the charts with you in a moment, but we are seeing some bearish pattern set up. Well, we've been really seeing that for quite some time, right? We've been talking about that for the last 3 months, and nothing seems to materialize. Buyers of dips come in, they step in, push the market higher. Then we get to a certain level, sellers show up, and then they push the market lower. So it really has been a tug of war with lack of volatility and price movement, and that makes it hard for the day trader intraday. Again, if you're swinging and you're holding positions in a longer term, I would just always, I'm an advocate of buying protection since volatility is low. Puts are relatively inexpensive. But I want to run into the charts now. Let's get right into it. Let's take a look at the bullish percent index. As you can see here, I've been noting since the last about 6 weeks or so, we've been making lower highs and lower highs, and we did have that big dip. Really never recovered from the sell-off here. So now we're back up again. Above closely to the highs, and I'll show that to you in the spider chart in a moment, but you do see that we have a lower high from here, and it's pretty much the same picture in all of the indices that we follow. Take a look at copper, and as you know, copper is a big bellwether, big market mover. We did have a 2-day oversold bounce, hit the 20-day right to the penny, and we sold off on Friday. Again, no strength in copper. This is something that's really concerning to me. If you are a bear, I just like to show the charts as I see them. Really have no bias on it, but as you can see, here's the weekly, broke down from the symmetrical triangle, and now we just have basically an inside week from the previous sell-off that we had. A break below 3, guys, is going to be really a real big warning, actually. Break below 3, and then we're looking at the 240, 270-ish area right up in here, 260, 270 area. And I think that that cannot go unnoticed to a lot of the fund managers that actually watch this. So this is something that's pretty concerning to me. NYMO. We did get up to the 40. We kind of sold off a little bit as of Friday. We had a lackluster day on Friday, very, very quiet. And let's see if we get a little bit of pushback above this 60-ish area and then start to roll over. But that's something that I'm still watching, I'm still looking at. NYMO has really been a non-event for the last pretty much most of the February, March, and then, of course, a little bit of April here. But interesting to see what the NYMO does in the coming weeks. Now, we did have that GDP number, and they did beat, but our estimates, they lowered guidance, and so that's not really that good, too. And the market still actually was being bid up, and it's just an incredible sight to see when you're having estimates and earnings from these big bellwether companies, as well as a miss on the GDP guidance, and markets continue to get bid up. But the thing is, how long can they hold up at these levels? And price is the only thing that's going to tell us. So we need to be patient, between today and tomorrow as we roll into May. Remember, we're in this seasonal weakness time of the year, April and May, sell in May, go away type mentality, and that very much could be the same case as it is the last, I believe it was the last 3 or 4 years that we've had that. So just something to think about, nothing actionable to be trading on. Just keep that in the back of your mind. All right, now let's take a look at the stocks above the 50-day moving average, and get that right up here. And as you can see, we're in this, back into this descending triangle, if you will. But what's happening here, mostly more important, 93.40, 85, 81.60. And then we're back into the 66.20, lower highs across the board as the markets move up. So what is this telling you? Like I mentioned before, a lot of the indexes are moving and not stocks. That's the problem, and that's concerning. Here's the 200, stocks above the 200-day moving average. Lower high, just starting to ever so slightly break above this cluster area of support, which was resistance. As you can see here, we're just kind of stringing along here. So this is a big concern. If we start to break below 420 and then 400 and stocks start to roll over, that's going to be a really big concern. So this is something that we're going to be really watching in the coming days and weeks. Take a look at the NASI. This is our indicator, real good indicator. Bounced last week, right? We're still on a sell signal, though, on the NASDAQ Summation Index, the weekly. Let's take a look at the New York Stock Exchange Summation Index. Still barely, just about getting into a buy signal. We need to have that. We need to see the we need to see the red line hook back up again as well. So this week it'll be either a buy signal or a sell signal on the New York Stock Exchange Summation Index. So let's just keep that in mind here. Keep an eye on this as well. All right, now let's just jump into gold, and then we'll go into the chart. Gold is almost ready for a sell signal here. We have a nice big bear flag in gold, and this is the gold end of day spot gold. As you can see here, I took the Fibonacci from here back to here. We're just getting into the first area where we like to get short. Now this is a real big sell-off, guys, and we have a real big thin zone here. So obviously we pop back up again. Any sign we might be able to get a short entry off in gold. Okay, now let's take a look at the GLD. Here's the GLD, and as you can see here, from the zero line up, we're almost up to 38. Looks exactly like the gold end of day future, but we are in this bear flag, as you can see, and we're just underneath the 20-day moving average. Now gold is up in the pre-market about 19 bucks. So if gold does pop, we want to see gold start to roll back down again, and whatever the low would be today, that would be the case. That would set the signal for a bearish case here. Now, a bear flag is only bearish when it breaks the lower trend line. So if you were a little bit more aggressive, you could sneak in a little early with your stops above today's high. But remember, you are sneaking in early, and we are in some sort of a dead cat bounce situation, which can go higher to the 38 or 50% retracement. So just keep that in mind if you're trading gold. Okay, take a look at the monthly chart of the spiders. We obviously took out these two highs. We are above them now, but nonetheless, we are above it ever so slightly, so we could start to roll back over again. Way overbought in the weekly chart, way overbought here in our MACDs on the monthly chart, excuse me. So this is a real big number. When you have a big reading like this on a monthly chart and you're at 96, you have to take cognizant that we are extended. Now, that doesn't mean we cannot go higher. We can go to 1600, 1625 easily if the market wants it to. But at that point in time, you have to be really seriously thinking about that we're going to get some sort of a pullback here. And that could happen at any given time. Here's the weekly chart of the spiders. As you can see, weekly chart still reading overbought above the 80 line. MACDs are way, way up in the nosebleed section. And look at what's happened here. 4 weeks, actually, take the first 3 weeks, inside week, up, down, up. And if you go take it back 5-6 weeks, you'll see after this big pop, we had 3 doji candles, and then 3 candles that we had, 4 candles actually, up and down. So really undecisive here. So we're going to really look to see what happens this week, and hopefully, just hopefully, we can get some movement here. We have not really done much the last 3-4 weeks here, other than that one big down week that we had. So it'll be interesting to see what happens. Now here's a lot of the charts that I pointed out possible M pattern here. As you can see, we have the high here, and then we have the lower high here. So as you can see, we have this beautiful M formation, and again, we need to have that right side and then break this neckline of 153.75. But again, lower high from here. So to me, it's just a little bit of a warning right now. Again, I am not holding any positions, so but it's definitely a warning to say that we are at these levels and we might be able to might be looking for some sort of retracement here. Okay, here's the 60-minute, and again, this head and shoulders, looking at a head test here, right up in this area. Let's see if this hold. If it does break above the head, then obviously this is going to be a failed head and shoulders pattern. But I definitely want to show it to you to let you know that we do have a bearish pattern. Again, only bearish here if it breaks below here. But here's going to be your target of 147.53 in this 60-minute chart of this bearish formation. Okay, here is the 30-minute spiders, and as you can see here, Bollinger Bands are pinching, signaling a big move to come. Doesn't tell you which direction. Just be unaware, be alert that this Bollinger Band 30-minute is actually tightening. So we are getting into contraction period here, looking for a bigger move where energy is building in the markets. Here's the Spider 30-minute. Again, just wanted to show you where we are with the Fibonacci retracements. We're back up above here. Really almost tested 100% move. We had it down here, up, down, up, and then now we're just sitting here consolidating again. Here is the IWMs, good gauge of risk, right? Risk on, risk off. And again, if you just kind of ignore this backside to the left, take a look at here. What you have is looking at an M formation, higher low, lower high off the high here, and then off of here. So you got higher low, you got a high, lower high off a high, lower high off the high, and this high here. And what's happening is the trend has changed from higher lows to lower highs, right? So looks like there's a shift in trend. You can't really see it only because that we're kind of bouncing back in here and chopping around into this bigger zone area. But again, guys, this is the big area that we're looking at is $89 in the IWMs and a Russell. Russell is a little weaker than the other indices, but again, good gauge of risk, so you want to keep an eye on that. Here is the transports. Again, guys, looking here. You can even see some sort of a head and shoulders pattern. I'm not going to draw it out. It's very sloppy. That's why I didn't put it. But here's the main focus is this long uptrend line. This uptrend line goes way back where to November, the lows of November. And this is what we want to see. If it doesn't break above here and we start breaking this area of 108.35, we're going to have a test of the 104.16 area and then reevaluate. But that, again, the strength in the transports have now gone away. That's not a good sign at all. Diamonds, again, back testing this upper trend line here. Again, lower high from here. So this is also another good sign that markets are making lower highs and not making higher highs. That is a concern to me. Okay, and XLF, as you can see here, the XLF actually had a good week last week. The banks had a good week, and that is a good sign. But again, just the banks alone can't pull the market up as well. You need every little sector, every quality, every big cap stocks that are moving together, equity markets that are moving together with other world markets. That is when the markets are in sync and everything you can dial down and get a little aggressive. You can't do that here. And as you can see here, we have a little bit of a broadening top here off the top. So again, interesting to see where this market goes this week, guys. We have 2 more days for the end of the month. We could get some window dressing, but I really like to see where this market may be headed. Apple weekly chart. I think personally the market goes lower first before the market goes higher. Again, that's just my personal opinion, nothing to be trading on. But what I do see in the markets, I do see some bearish patterns. I see some red flags. We have been seeing that, unfortunately, for the last 2 months. But at one point in time, things should come to head and the market should move low, which I think would also be very healthy for the markets. Here's Apple weekly. Nice bounce here, guys. But we still got an inside week from the previous week. Here's my annotations here from the 690 area when we were breaking down. Now, I do have a head and shoulders pattern, as I mentioned to you last week, right? We have head, left shoulder, right shoulder. Here's the neckline coming in at 417, 417.98. And we have a bear flag. Usually that's what happens. Market breaks and goes into a bear flag formation to back test the neckline. The target area for this is 360-ish. I'm sorry, 363-ish. Give or take 7 points, 5 points, if you will. But this is the target area that lines up. Now, this could fail, and we can just break back above higher. However, if we do start to break out of this bear flag, then this pattern is on, and I think we head lower just like we did here. And if you could see up in here, we had another Head and Shoulders pattern. So Head and Shoulders pattern worked really nice in Apple. So we could literally see 360-ish area. That's where I'd like to start accumulating Apple. 360, 370. That's where the target would be to start really accumulating Apple. All right. And lastly is the Qs. Bearish. We have a big bearish rising wedge. Again, only bearish on a break of that lower trend line. And again, we have inside weeks again, guys. So we haven't really moved anywhere in the last 3 weeks. And just want to show you lower high off the daily chart of the Qs. And again, Qs usually gets held hostage to what Apple does because it's heavily weighted in that index. All right, guys, that's it. I hope this helps and gets your week ready for the trading week. So let's keep an eye on a lot of these indices, and also we do, one thing I wanted to point out, we do have FOMC coming out, I believe Wednesday at 2 o'clock, 2:15, so make sure you're aware of that. Remember, guys, 2 more days left of the trading of the month of April. Anything could happen. We could get a little bit of window dressing. We are up in the pre-market about 5 handles. We have been up for 6 days. Remember that. We are extended in price. We have been up for 6 days. Not that the market can't go higher, but to me, I would not be getting aggressive at these levels or be adding to any swing long positions at the moment. Have a great day. We'll speak to you tomorrow. Take care, everybody.